Greetings and welcome back to the next part of our price channel training, why channels work. Investors, we like to refer to price channels as a self-fulfilling prophecy, and here's why. Channels work because as more and more people start noticing them and trade accordingly, price will move as predicted, thus making channels a self-fulfilling prophecy. Basically, what this means, guys, is that there's thousands of traders all over the world looking at these same pairs the same way we are. And as price moves from support to resistance, people are buying low and selling high in the same rhythm as a price channel, which is allowing it to move as predicted, thus making it a self-fulfilling prophecy. And we're going to give you an example what that means. Now, there's a couple ways you could trade within the price channel: trading the bounce or trading the breakout. So let's go ahead and show a live example of how to trade the bounce or recognize how to trade the bounce within an ascending channel. But first, let's go over a couple tips. Because it is not advisable to trade the direction of the trend, having identified an ascending channel, you could go long at the lower boundary of the channel, close at the upper boundary of a channel. And again, it is not advisable, guys, to trade the opposite direction of a trend. So we want to go ahead, if we see an ascending channel, what do we want to do? We are looking for buy opportunities, right? So let me go ahead and give you an example here of how to trade the bounce with an ascending channel. Let's go ahead and mark our ghost feed here and make an ascending channel. Now, what we want to do is we're looking for opportunities to trade the bounce. As you can see, as price moves up in between these two trend lines, and it's respecting our reliable support zones, which are our lowest points in the market, which are these two areas right here, and our reliable resistance zones, which is our two highest points in the market here. As price moves down, this would be an area at our lowest point in the market that you will be looking to buy because this zone has been respected as support. Even though you have an idea, price is moving up in between this channel, this is an ascending channel, we're only looking for buy opportunities. These are opportunities, depending on how you trade, that you could sell, but it's not advisable to trade against a trend. So you want to look for buy opportunities within the market on an ascending channel. But when price moves up and it hits our reliable resistance zones, which is our two highest points in the market, that is an opportunity for you to sell. And there's a lot of money to be made within these zones in between price channels. And let me give you an example. If I would take out my pip calculator here, and we decided to do a long position, because remember, a long position is a buy position from our lowest point in the market to resistance at the top level of our trend. In this price channel, this would be an example of a 5 pip move. Okay, just calculating it from what we created. There's money to be made in between these channels. Okay, so this is how you would identify an ascending channel and trading the bounce. Now let's go ahead and identify trading the bounce with the descending channel, because it is advisable to trade the direction of the trend. Having identified a descending channel, you could go short at the upper boundary of the trend or do a sell, or close at the lower boundary of a trend. Or like I said, in some cases, you could do a buy. And we'll add our trend lines at our two lowest points in the market, the last two back there, and our two highest points in the market. So this will be our descending channel. At our two highest points in the market, these will be sell opportunities as price bounces up and down through these two trend lines. Sell opportunities. And down here, and last time I put you could do a buy, which you could in some cases. But again, it's not advisable to trade against a trend. So you could trade down until it hits your support zone, and you will close right here. These are opportunities for you to get out the trade before the market reverses. Now I'll put two X's right here representing for you to close and get out. So if you identified your descending channel, you'll be able to trade the bounce up and down, okay, as the market hits its lowest point in the market and rises back to its highest point in the market. So these are sell opportunities. So now you know how to trade the bounce with the descending channel. Let's go ahead and move on. Now, a horizontal channel is a little bit different. A horizontal channel trading the bounce, because there is a prevailing direction in a horizontal channel, you could either A, go short at the upper boundary of the channel or do a sell. You could B, close at the lower boundary of a channel. You could C, go long or buy at the lower boundary of a channel, or you could D, close at the upper boundary of a channel. So let's go ahead and show you all your options on a horizontal channel. Have a little bit more options on a horizontal channel, right? Okay, and we have our two trend lines, which is our support and our resistance. And let's go ahead and identify our lowest points in the market on our horizontal channel, which would be here and here. Now let's identify our higher points in the market. Obviously would be here and here. So as we said, you have 4 different options here. So at our highest points of the market, because there is no prevailing direction in a horizontal channel, at the highest point of the markets, what can you do here? You could sell. This is an opportunity for you to sell, and you can make money as the market goes down to the next support level. And the next highest point in the market, opportunity again for you to sell. Now down here at your lowest points in the market or your lower boundaries, these are areas for you to buy. So the horizontal channel is something you definitely want to identify, because there's more opportunity to make money within a horizontal channel as well. So now we've identified how to trade the bounce within a horizontal channel. Now we're going to talk about trading the breakout on our next video. This is something that a lot of traders that are looking for within the market to make money when we identify a breakout on a horizontal, ascending or descending channel. And we'll show you guys how to trade the breakout on our next video.